Good morning, ladies and gentlemen. I'm Bethan Moore, a partner and co-director in the firm, along with Alan Dowsett. Welcome to our presentation on MTD, Making Tax Digital, which we are running in conjunction with QuickBooks. And we have our account manager here today with us, Graham Badley.
Hi.
So the format for this morning will be that Alan will talk about the background to Making Tax Digital, where we are now, what HMRC are doing, and then I will talk in a bit more detail about some of the requirements, and there'll also be time for questions before the break. After the break, we'll be handing over to Graham, who will tell us about QuickBooks and also demonstrate the software. But first of all, I'd like to introduce our team. So, in Hinckley, we have Sunil. Sunil. Kobe. Maxine. And Sarah. Sarah's outside, I think. And from Nuneaton, Pamela.
Hooray!
Nikki.
Hooray!
Jenny.
Hooray!
Julia.
Hooray!
Megan. And Julie.
Yeah!
I just thought that many of you will sort of know these names, perhaps spoken on the phone, but not actually have met these people. So it's a good opportunity because we're all here just to meet everybody. Right, I'm now going to hand over to Alan, who's going to tell you what's been going on.
Well, nice to see you all, and I hope you're going to get something out of today. Before I start, just out of interest, can you just raise your hands if you knew anything about MTD before we sent out the invitations? That's about representative. Last week there was a survey done, and 42% of VAT registered businesses who are going to have to comply next April had no idea what MTD is about. That's 4.5 months to get things up and running, which is HMRC's plans. So the plan is, or HMRCs have launched an initiative to digitalise the whole of the UK tax system. Can you all hear me at the back, all right? Good. So that is their plans. The aims is that the UK should be a world leader in the digital world. That's their primary aim. Secondly, that the tax gap, which is caused by errors on VAT returns, will be closed, and they reckon that they're going to be able to draw in about 5 billion a year through that tax gap. Well, we'll wait and see on that. It's going to reduce unwelcome and costly compliance visits, because they'll all be able to do it digitally online. They'll be able to see what's going on. It will enable them to match any VAT claimed on inputs with the other side, the VAT on the outputs from suppliers. And they'll be able to drill down and do pre-credibility checks on anyone who's claiming a refund for VAT. So it means they can really look, the object is to look into their the records, and it'll all be more open. So they're all really measures to maximise revenue and reduce the costs for HMRC, all in their favour. We'll find out later what they're doing to help us. The timetable for these changes has already been postponed and revised, and I'll come on to that on the next slide. Specifically, it affects VAT registered businesses with a threshold, who are trading above the threshold of 85,000. 4.5 months to go is not a lot. It's a big change to the system. In my 30 years in practice, I can honestly say it's going to be the biggest upheaval that we've had. In 96, 97 we had self-assessment. Recently we've had pensions, auto-enrolment and RTI. Well, I think they're going to be dwarfed by the changes which are going to come about by MTD. It's not all going to happen at once, and we'll just go on to the timetable. Thank you. So, this is, it's headed up revised timetable, but really I want to just start talking about the original timetable. And I'll start with income tax because I think that's where the hidden agenda is from HMRC. Originally, businesses which were trading above the VAT threshold were going to have to produce quarterly income and expenditure statements, basically accounts, the same sort of thing as goes onto the self-assessment returns at the moment. That was going to be done on a quarterly basis. That is now on hold, and it's not until at least 2020, and probably will be later, the way HMRC are going. But I'll just draw attention to the second thing. Entities with turnover over 10,000 are also going to be drawn into the net and joining the club. But that again has been put on hold and won't be starting just yet. But it is a thing that's on HMRC's agenda, as is the corporation tax. That was due in a couple of years. That looks as though it's going to be postponed as well. But we're looking really, I think, about 3 or 4 years' time. We've actually, the only item left is the VAT. HMRC are determined that it will be kick-off date 1st of April 2019. Excuse me. We've actually learnt that only yesterday from sources within HMRC. Firstly, staff haven't had hardly any training at all. Secondly, no date has been set to change over their systems. It's going to be a fairly major change for them. To accommodate MTD, but nevertheless, HMRC are still ploughing ahead with their plans to roll out on the 1st of April next year. Of course, people with a staggered VAT quarter won't have to start on the 1st of April. You may even not have to start until the 1st of July. I'll just briefly mention the hidden agenda. When income tax and corporation tax are being reported on a quarterly basis, the consensus is that the revenue will be wanting payments on a quarterly basis as well. So they'll be dragging in payments 12 months, 18 months in advance of what they're doing already. They're proposing to completely phase out the existing self-assessment return and therefore eliminate the panic deadlines. What it'll actually mean is that every month for us and every 3rd month for yourselves there'll be a panic deadline to meet, so it'll be even more chaotic. So moving on from the deadlines, who does it apply to? Well, it's for VAT registered entities, so it's companies, partnerships, sole traders, landlords and charities. So it's a whole range of different entities. The value of supplies, of course, includes zero-rated supplies, so if there's mixed supplies in a retailer with food and standard rated products, it comes within if it's above 85,000, including the zero rated, then they come within the net. And the measurement of the threshold, as MTD starts, is the 12 months up to the 31st of March 2019. If the turnover is above 85, then you're drawn into the club. Then every month, on a rolling 12-month basis, it's the entity's responsibility to ensure that they haven't gone above 85,000 if they are to stay outside of the MTD net. Once you're in the net, that's it. If your turnover drops and you go below 85,000 on the rolling basis, you can't opt out of MTD and go back to filing in the normal way. The only way out is to deregister for VAT. So, moving on to, very briefly, what is involved. Bethany is going to give some more details in a minute. The submission of the VAT returns is going to require an application program interface, an API. That's some sort of digital speak for a platform where information is transferred digitally to HMRC, and HMRC can look back in and transfer information back in. Initially, we're led to believe that HMRC will only confirm receipt of information, but later we understand the platform will enable them to drill down into traders' records. VAT records will need to be maintained digitally using functional compatible software. So what's functional compatible software? Well, it includes, you'll be glad to hear, Excel spreadsheets at the moment. You can use Excel spreadsheets with an API or using API-enabled spreadsheets to digitally file the VAT returns. But we're not sure that that's just not a stopgap measure, whether they'll be wanting to be able to drill down into the accounting package through the API. So the functionally compatible software in itself is not enough. It needs an API, whatever that is, to digitally link it to the HMRC platform and to talk to HMRC. So, the overview. You'll be pleased to know this is my last slide and I'm handing over to Bethany after this. We need basically three methods of utilising the API and going onto the platform. Firstly, there's the digital direct software, and by that we have QuickBooks online, which Graham's going to give a demonstration of after the break. There's Xero, the Sage, and there's one or two others which are now approved. There's bridging software, which will enable us to go from Excel spreadsheets and accounts packages such as VT into an API onto the revenue platform. We're not sure, how that bridging software is going to stand up in the long term. And overall, we think that the direct software solution is the one which everyone is going to have to adopt eventually. To date, 4.5 months to go, HMRC have only approved a small proportion of the APIs and bridging software. We've had about 2 months, I think, of approved bridging software to look at. We haven't had a chance to really look at it yet. And so, we haven't been able to evaluate the product, so we can't give much advice on it. I would just point out that this lack of preparation by HMRC has led to a damning report from the House of Lords Finance Committee. And they said, I think last week, in their words, HMRC have shown woeful unpreparedness, that's right, in their MTD proposals. It's like a giant car crash waiting to happen. It really is. Despite this, though, we have to assume on the 1st of April we're going to have to comply, and all of those VAT registered traders who are in the net, or in the club, are going to have an API in place. So with the voice just about going anyway, I'm going to hand over to Bethan to give a bit more detail. Thank you.
Thank you.
Sorry.
Okay, so just on that note of the unpreparedness and the fact that many of you have not heard anything about this, I understand that HMRC are actually just starting a programme of writing to VAT registered businesses who trade above the threshold. So you will be hearing something soon. I don't suppose you'll get much help from HMRC. So Alan has mentioned this functional compatible software. So what is it? We know that certain records will have to be maintained digitally using this software. So the definition is actually a programme or set of programmes that can record and preserve electronic records in an electronic form, which will provide HMRC with information from the electronic records and returns in an electronic form and by using this API platform. And also we'll be able to receive information from HMRC using the API platform. This is not necessarily one programme, it can be several programmes, several different programmes linked together in one way or another, so it can be different products. So in this functional compatible software, there'll be an obligation that certain information records will have to be in this electronic account. First of all, there's what's called designatory data, which is your obvious things like your business name, your principal place of business, your VAT registration number, and a record of any VAT accounting schemes that you might be using, like a retail scheme. And then also, for each supply, you must record the time of supply, the value of the supply, and the rate of VAT charged. For supplies that you receive, it's the same thing. The time of the supply, the value of the supply, including any VAT that's not claimable, and the amount of input tax that you're claiming. So there's sort of really no additional records that need to be kept, but those are the basic things that have to be in electronic format. They have said that where you've got more than one supply on one single invoice in the same VAT period with the same rate of VAT, then you can record a single entry. So you haven't got to have a sort of line by line of each product, it's really by invoice. And also where the output tax might be apportioned on a mixed supply with a single inclusive price. You do not have to record the supply separately. You can record the total value. An example might be a meal deal. And in a meal deal, you might typically have a sandwich, which is at 0%, a standard rate, 20%, crisps and a drink. So the VAT on that is 30 pence, and you can record that as one supply with 30 pence of output tax. So you can sort of consolidate to a certain extent. So, all this and more is contained in VAT Notice 722, which is this document here. I understand that there's a link to this. When you file your next VAT return, I do think there's a link, and if you want to, you can read it. It's how many pages long? 28 pages long. Alan and I have read it more than once. It was published in July 2018. It explains who will be affected and some of the exemptions there are. They're not very useful to most of you. Things like remote locations and that sort of thing. And it also contains examples and covers various VAT schemes. The contents include checking if you have to follow the rules, digital record keeping that I've just explained, voluntary updates, supplementary data. There's a section on agents. It gives examples where digital link is required, talks about your rights and obligations, what to do if you've got a question, and how to put things right, and also a little bit on how HMRC uses your information. Some of these things I'm going to talk about on the slides that follow. So this is from the VAT notice, and it's a list of scenarios that you might find, and it sort of includes using a single API-enabled piece of software, using software that's not compatible, and using spreadsheets, and then goes on to perhaps more complex things like group situations, which I'm not going to cover. I'm just going to cover 3 of the most common scenarios. It's perhaps worth saying that some of these links, well, all the links really ultimately will have to be digital. Initially, some of this might be dealt with by a cut and paste, but there is one situation where there's a mandatory digital link right from the outset. So the first example we have is where you're using a single API-enabled software package. And so this uses accounting software to record all sales, all purchases, all expenses in a digital format, and it transfers those totals to an API-enabled software which prepares the VAT return and submits it to HMRC via API. So an example of that might be QuickBooks. One sort of package that does everything that's required. So that's the kind of simplest situation, really. The next one uses 2 different pieces of software. So you might have your VAT records in one piece of software, which isn't API enabled. The VAT return is prepared in another piece of software that is, and then transferred via API to HMRC. There needs to be a digital link between the 2 bits of software, but as we'll see on the slide in a minute or two, there's a bit of a soft landing where you might be able to cut and paste between those 2 situations. And the final example I'm going to talk about is where we've got a spreadsheet, and then bridging software, and then the API. And in this case, that digital link needs to be digital from day one. It's mandatory. You can't cut and paste. As I mentioned, HMRC have said that during the first year, so that's from the 1st of April 2019 to 31st of March 2020, they're going to what they're calling a soft landing, which means that not all of it will be mandatory from day one. There'll be a year to sort of allow people to get used to it, using cut and paste. That is just for 1 year. Okay. So, Alan's told us that HMRC aims to be a leader in the digital world. They're pushing through these, making tax digital reforms, come what may. It's really for their benefit. They're making cost savings, they're trying to narrow the tax gap. So you might expect them to provide the software. Are they going to help at all? No, not at all. They're just telling us what needs to be done, and it's up to the taxpayer, the business, to find a way to do it at their own expense. So there's one or two questions that people might have, common situations. One of these is, can you carry on doing it the way that you have been doing it, using the government gateway? Will that be okay? Well, yes, if your VAT-able turnover is below the threshold for the 12 months leading up to 1st of April 2019. You can carry on just as you were before, using the government gateway. The VAT registration threshold is currently 85,000. HMRC did have some plans to cut that in two. They were talking about a figure of 43 a year ago. If that came in, then obviously this would bring in a lot more businesses. They've currently said that they're going to leave it at 85, but it won't be going up. We've been used to the situation where every year, every budget, it goes up by a couple of thousand. That's not happening anymore. It's stuck at 85,000. So more and more businesses are going to have to do something. Another question people might have is, what about cash accounting schemes? What information do you need in that situation? Well, as it's cash-based, the date of the cash receipt and the payment is the time of supply. So you don't need to keep separate records, separate sales and purchase ledgers for MTD. You can just record on a receipts and payments basis. I won't say a lot about this one, but what it's talking about is if you have a shop, there are various retail schemes that you can use to calculate your VAT. What are the requirements there? Well, you need to record your gross daily takings. You don't need to record each individual sale. Some businesses might be used to sort of putting into the software their weekly takings possibly, or the monthly takings. You won't be able to do that. It needs to be gross daily takings. What about businesses that trade on platforms like Amazon and eBay, when they have a whole host of transactions? Well, HMRC are aware that it's not really practical to record every single thing separately. So they can sort of carry on as they are really, and just a single invoice, you know, probably on a daily basis. VAT return frequency. So this is generally a quarterly situation. Some clients submit monthly returns, for example, often with farmers, if they're used to getting repayments. They can carry on doing it monthly, but they need to do those monthly returns through the API.
I actually mentioned there on the farmers. I did go to a farming conference about 2 months ago, and it was discussed that monthly returns, they're not ready for them yet, and you might just get 3 or even 6 months grace before you have to conform with the API. But it's not a long period. That's all.
There are cases where you might need to make adjustments to your figures. So you've got all the information in your software, but then you have to do a calculation. And a typical example of that might be a partially exempt business where some of what they're supplying is standard rated and then some of it's exempt. They have said that you can make these sort of calculations outside the digital records. So you can do them on the spreadsheet or by hand and then put the adjustments in. Okay, what about record keeping then? Some businesses now are starting to actually scan in their invoices into the software. And I think QuickBooks has a facility where that's what you can do. In those cases, you don't need to keep the original documents. However, if you're just taking information from the invoices and putting it into your software, then you need to retain all of those original documents. So I suppose that's sort of pretty much as it is now, really. So those are just some of the rules and changes. We've looked at some examples and some questions. And the real problem that we have is that a lot of the software that we're using and spreadsheets on its own is just not compliant. So from 1st of April, that period starting after 1st of April, you can't carry on, you have to do something. So we sort of became aware of these plans, probably about 2 years ago, really, I suppose, what HMRC was planning. Not the detailed timetable then, but we knew that some changes would have to be made. So we've spent, and particularly some of my colleagues, Jenny, Pam and Nikki, in the past 9 months looked at quite a lot of different software. They researched the market and sort of tracked these things down. Some of them we already knew, other ones we had to get a demo and test it out because we wanted to have something that would be able to say to our clients, well, this is what we think you should do. So really at the moment, I think there are 2 viable options probably. Compatible accounting software, so everything that you need is in one place, or some sort of bridging solution. So software that you currently use, something like VT Transaction that many of us know and love, which we have heard, they're not developing that any further. You won't be able to carry on using that on its own. So those are the 2 main sort of ways of doing things. And although bridging software might seem a kind of attractive option, because you can carry on doing what you have been doing with VT or spreadsheets even, we feel that although it might be acceptable now in the short term, in 2 or 3 years' time, where are we going to be then? Given HMRC's agenda, I think that there'll come a time when that won't be acceptable. Because with bridging software, they're only going to get really summary figures. So, sort of with that in mind, in our view, it's sort of really better to accept these changes. Well, we have to accept them. So get on with it, embrace these changes, and put in place a solution that will continue to work in the years to come, and not just a short-term stopgap measure. So the sort of various software that we looked at, they're mostly cloud-based solutions because that's the way the world's going. now. Yes, you still get desktop options, but you know it's in the cloud, and there are advantages to that. Some of which we'll hear about later, I'm sure, from Graham. But we looked at things like Sage, which we use anyway. We looked at Xero, which we use anyway. We looked at things that we're not familiar with, like Free Agent and Reckon. And we took into account all sorts of things. Functionality, you know, whether it did what we needed it to do as accountants, because not all software does. Some of it, to the untrained eye, you know, you might think it's doing what you need, but you know, we need it to produce certain reports to prepare the accounts. So looked at accessibility, you know, how easy it was to find, was it going to be around for a long time, that sort of thing. Very importantly, we looked at ease of use, because it's all very well having great software, but if it's hard to use, you know, that's not a good solution. We looked at price as well, because some of these things, you know, are really quite expensive, and because they're in the cloud, it's a monthly subscription. And you know, I've heard some quite frightening figures with some of them, sort of, you know, £100, even £200 a month, which includes support and what have you, but even so. So, taking all that into account, we decided a few months ago that we would partner with QuickBooks. We're already using QuickBooks. We've already got quite a few clients who have moved over to QuickBooks. We're using QuickBooks ourselves now. We're just starting to do that. Because the advantage is it's fully API enabled. There are lots of other advantages to it, and you know, and it's a cost-effective product. The price is very reasonable. So that's where we are. That's why we're running this seminar in conjunction with QuickBooks. So that's sort of, you know, we continue to support clients, obviously, that are using different software. We're not, you know, I have heard that some firms are sort of saying to their clients, wholesale, you know, you have to, and all their clients, you have to move to this, or have to move to that. But we're not doing that. We've never been like that. You know, we'll try our hardest to support clients in whatever software they want to use. So that's the situation. And after the break, we're going to hear from Graham, who's going to show you a lot more about QuickBooks and advantages. But for the time being, are there any questions about any of this from anybody? No?
It's frightening, isn't it?
Ultimately, even if you're not VAT registered, because as you know, one of my businesses, one isn't.
Yes.
Ultimately, will all of my businesses have to use this system just for even regular annual returns?
I believe so, yes. Yes, that is the strategy that HMRC have set out. What we don't have at the moment is a timetable for it.
But ultimately, writing figures down on a piece of paper...
That's not going to be acceptable. No, there will have to be a change.
Yeah, for everyone, every business in the country, regardless of whether
for
they're
every
registered
business,
or not.
even the smallest of businesses.
Yeah.
You know, and it's sort of all businesses, landlords, every taxpayer. Yeah, they're going to have to digitalise.
How is it going to affect, for example, we don't pay the VAT on only when we have been paid?
Yes, cash accounting, you mean? You're on cash accounting?
Yes. So
yes.
We don't pay the VAT in proportion when we have invoice.
No, you wait for your customer.
Pay when we have been paid. How will that impact on us?
Well, there's no different from anybody else, really. You're just accounting for your VAT rather than on an invoice basis. The date of the invoice, you're accounting for it when you get paid. So you'll still have to come within this regime for the first VAT return that starts after the 1st of April 2019. So you'll still, the VAT will still be calculated in the same way as you do now, but you will have to embrace these digital changes.
But on the software, there'll be, I mean, there is already on VAT transactions and in QuickBooks, the option to transfer from invoice basis for doing VAT to cash accounting. There'll still be the ledgers and everything within QuickBooks, but the VAT return will just pick up the cash transactions through the cash tables.
Has anybody else got, yeah?
How do we do the transfer from the package you're using to QuickBooks? Because my tax year finishes the 1st of May, or 31st of April, 30th of April. I've got a month where I'm still in that tax year, but and I do my VAT monthly, so I've got to have that last month of that tax year. Is that going to be done digitally, or can I keep it in with the old package until the next VAT return?
Well, I believe, and we haven't heard from confirmed from HMRC, there is a bit of a delay on implementation of monthly returns. So if you're a normal monthly return, I know it applies to farmers, and I think to everyone else on monthly returns, you're not actually going to be drawn in from April. It may be sort of July time or whatever, 3 months down the line, but then you'll have to comply, you'll have to have that API in there. And it does mean that your accounts year, you're going to have 3 months, whatever, on the old system, and then 9 months on, if you do go to QuickBooks, on QuickBooks, the first year will be a bit messy. But
how do you sort of have that? 2 months in the old package and then like 10 months in the new package. How are you? Or have I got to do the 12 months and do 2 months in both packages?
well, I wouldn't say you've got to go back and rewrite the book.
Jenny, do you want to?
I think your best option for you would be to do your monthly return for April in BT, and then you'd move over from the 1st of May, because they are also giving you this soft landing. So I think if you do that 1 month in, to do a complete year end in BT, and then you'd move over to new software from May. I think that would be the best option, really. And I think that's, for everybody here, the optimal time to move would obviously be the first day of your new accounting year.
Absolutely, yes.
Just so you're aware as well, in terms of transferring of data, so we've got a team internally that work with Bethan and her team, so we'll drag up to 2 years of data from your previous systems into QuickBooks, and they'll be free of charge. If you want more information dragged over, the reality is you're probably not going to need more than 2 years, but some of you might want your historical information. We can drag as much information as you want over, but 2 years will cover the cost of that for you, and we've got our teams internally that will do that piece for you.
I think at the back there's Philip and Diane. They have actually adopted QuickBooks, and they're in the process of just putting everything on. So I think they'll be quite interested to speak to you later, Graham, and to see how that process can be eased.
Automated, yeah.
There's a question here.
So can you transfer all the contact details I've got on my accounting system to QuickBooks? You can just do the whole thing?
Yep, and transactional information. 2 years of. So what we'll always recommend, the best way of doing things, if you can do, because you're moving software, you hopefully would want a nice clean system with your new system. So our advice would always be just bring over opening transactions or opening balances, etc., to try and keep it as clean as possible. Then we can bring in contact information, supplier information. On the transactional side, try and keep it as clean as possible, just because it's a new system, you know. But when you're transferring data between old systems, sometimes there is corruptions behind the scenes, if that makes sense. So I'm just making you aware of some of the pitfalls. But the reality is if you want that information, the full lot, then yes, we can transfer the full lot over for you.
I'm not so concerned about the invoices.
Yeah.
For me,
Perfect.
I'm more concerned about the client's telephone number.
Absolutely.
contact details.
All of that's transferred over. Yeah, that's what we call static data. So absolutely, all of that will be dealt with by. So as I said, work closely with Bethan and her team, who work closely with our teams internally, and we'll take care of all of that for you on their behalf.
Anybody else? Yeah.
Well, firstly, thank you, Bethan and Alan, for having this event, because so few accountancy firms are doing this with their clients, and I really seem to thank you. The other question I have is for my clients. Some of them have just got their accounts on a spreadsheet just because they have very, very simple accounting systems, even though they're only that threshold. And I can see from here that, yes, they can continue, but as a coach, my advice to them would be to get started on the right system,
Yeah.
the sooner the better.
Yeah, yeah.
And their concern is how will they transfer their old data into them so that they don't lose visibility of past accounts. Is that possible?
What, from a spreadsheet?
From a spreadsheet?
Yeah. Yes, it is. So it doesn't really matter. It's system agnostic. Sorry, that's technical talk. But the reality is it doesn't matter. From spreadsheets actually is the easiest way of getting data into our system because it's just import routine. So we have templates available that they just populate the information onto these templates. Those templates are then just imported into the software so you can have pretty much all that you want. There's also transactional information as well, so we've got templates to actually bring in transactional information. Should you need to bring in transactional information, our advice is always do it at a start of a new accounting period or new accounting year to keep it as clean as possible. But if it is that you need to bring transactional information over, yes. So Excel is probably the easiest one to do it. And then if you are looking at other software packages, we work in conjunction with third-party providers that will bring in all of this information that you need into QuickBooks.
Cool. Was there a question? Yeah.
Yeah, I sort of get the API bit, which is transmitting the data to HMRC, but I think what I heard Alan say was that the software has to allow HMRC to go beyond that interface and into the underlying records.
Yeah.
Was that correct?
Correct, yeah. That's
which is
we believe
really quite interesting, because there must be all sorts of data protection issues, managing that interface to allow them a window into the underlying data.
Absolutely.
That really intrigues me from a sort of statutory point of view.
Yeah.
Particularly after we've just had all the GDPR,
absolutely. Yeah.
got all the rest of it, and now we're giving them a window into the underlying records in all of our businesses.
Yeah, that's...
That the businesses we interact with might not want them to see.
But they're big brother, Clive, up there.
No, I get that.
We're down there.
I just get the impression, Alan, without wishing to start a huge debate, that this might have a little bit to run before they actually get
I think they've got to do a massive PR job all round before they can. Yeah.
So
it was more a point than a question.
As they alluded to, as they alluded to, there's the soft landing period. So 2019 to 2020, they just want summary information. Sure. But after 2020, so they're giving themselves a year. So the year is to help people transition, get used to the new systems that they're going on to, or perhaps there might be some that some businesses that maybe take a little bit more time in terms of learning new systems. So they're giving that grace period for that first year, but after 2020 they want access to the underlying transactional information.
And that would have to be what, scanned copies of invoices, or?
I don't think they necessarily need that.
No.
Because that's what they'd look at if they came and did a visit, isn't it?
Yeah.
They want to see the actual invoice.
They would, yeah.
Yeah, but they, because they get information from customers and the recipients, then they will sort of try to match things up digitally.
So they'll be able to drill in to see individual amounts going in on invoices, one side and the other, to match. So yes, they can look down. That's what their intention is.
That's what the ultimate intention is.
And through that, to be able to, so that they don't have to go out doing these compliance visits, which are costly and so on. They can do it sitting at a desk. So it does mean that the data and everything that we are going to have to file eventually on a quarterly basis has to be fairly robust. And I think that's another reason why sort of cloud-based software, where we as agents have got to be more real-time and proactive in helping clients to make sure they don't file things which are going to set the flags going at HMRC. So I think the accountant's role is going to change. We're not going to be able to look at things 6 months, 9 months in arrears. We're going to have to be there real time to be able to help in that month's input to...
A review function, you mean? So
but I mean, we're not going to be able to manage to do it if every client wants their things reviewing every month, every quarter. We just couldn't cope. So it's going to be, the client's responsibility as well, just for them to do their internal review, and then to ask us to look, if they feel there's anything particularly which doesn't look right in that return. It's going to be, a lot more. I think a lot more talking, not face to face, but over the computers, looking in the cloud. Excuse me.
Anybody else?
I've got 2 questions, but you might cover them later.
Yep.
Okay, the opportunity to ask further questions after Graham's done his presentation.